Hi guys, welcome back to the channel. My name is Dave, and last week, two things with Bitcoin happened. First, we had all new time highs, $111,000 per coin. And two, we celebrated Bitcoin Pizza Day. That's the day back in 2010 that Laszlo Hanya went out and he bought two pizzas for 10,000 Bitcoin, which would now be worth about $1.1 billion. Now, I'm sure to Laszlo, he was just mining some Bitcoin and went out and bought some pizzas and felt pretty good about his free pizzas. But in hindsight, obviously, things have scaled rather dramatically. But there's still a lot of people that are anti-Bitcoin, on the sidelines, looking at it saying, is this an asset class for me, whether it's my age or just my view? So today I've got a stepping stone for you into the Bitcoin world. These are ETFs from Calamos. I find them really interesting. Okay, so this is a way to jump into Bitcoin. Actually, it won't even be Bitcoin. It'll be Bitcoin Lite or Bitcoin half-calf. You can't lose with one of them. I'll show you. So anyway, let's jump in and take a look at these ETFs from Calamos. If that is what you're looking for, please stick around. Whoop. So today we're covering the Diet Coke of Bitcoin ETFs. But as far as ETFs go related to Bitcoin, products just keep coming, one after another. Now, I've talked about BTCI. That comes to us from Neos. It's an income product. I'll link that video up above if you're curious about that type of product. But more and more keep coming. Now, my buddy over there at Armchair Income, he did a review a couple weeks back about a lot of Bitcoin products. So I'll link his video as well if you want to check that out. But I could go on for weeks talking about these things the way they're rolling out right now. But what I found interesting about these Calamos structured protection ETFs related to Bitcoin, I found this really interesting, so I think it's worthy of talking about. Now, I have talked about one of their products before, similar, but based upon the S&P 500. I'll link that up above too. So if Bitcoin is not your flavor of the month, you want to stick with something like the S&P 500. They have products for that too. Again, coming from this, you can't lose or you can't lose very much perspective, but then you have upside as well. So anyway, let's jump in and take a look at this family of Bitcoin ETF products. So today we're going to be talking about this family of products from Calamos. This is their protected Bitcoin ETFs. They've also applied this same idea to other things like the S&P 500. So if that is more up your alley, you can check out those products as well. But I think it's a creative idea. And the option strategy behind it is not overly complicated. So I'll show how that works as well when we work through this. So if you really wanted to do this yourself and manage it, you certainly could if you have the experience and you want to do that. But if you're okay paying a little bit of a fee, you can also do that to Calamos. I'm sure they'd be very happy to have you. Now, they announced this upside cap rate for April series. When you see that series, with their S&P 500 products, they do it every single month. With this one, it looks like it's about once a quarter. And in this case, they've got the 100%, 90, and 80% downside protected Bitcoin ETFs, and those are the ticker symbols. So you do want to do this, word of caution, on day one if at all possible. Now, there are scenarios where you could jump in later on if nothing has occurred or it's declined slightly. But in general, you want to get in on day one. They do this out 1 year. The option trades go out 1 year like a leap option. And you're in it for a year and you have a defined outcome. So if you scroll down here, we're going to see, let's see, here's the three different ones. So are you a coffee drinker? I would put the fourth one over here. This is I own Bitcoin, whether you buy it through an ETP or you just buy it directly. That's black coffee, but if you want to go a little bit lighter, I get it, right? If you start out drinking coffee, maybe you put cream and 2 sugars in it, this would be CBOA. Okay, so this is 100% protected. You can't lose except for the fee that you're going to be paying to Calamos. But you have an upside protection or upside opportunity of around 11%. So pretty good, right? I can't lose. I can make up to 11%. That's probably really attractive for certain investors out there, especially if they're concerned about, not losing money. This is where you play. But if you're willing to take on a little bit of risk, CBXA at 90%, an upside of 29.43%. So in this case, think about it. This is cream with 1 sugar. And in this case, you invested $10,000, you might only get $9,000 back, but you have the potential of getting $12,900 back, right? So that's pretty darn attractive. And then as you start to grow some hair on your chest, you can go to CBTA. In this case, it's just coffee and cream, right? 80% protected. You put in $10,000, you get back $8,000. But if everything goes according to plan and Bitcoin continues to run, you could get back over $15,000. So again, there's a little bit more risk, a little less protection. That's how these break down. So those are all available to you, but again, you want to try to buy these on day one. So they've got other information in here that's really interesting. You can kind of read through this if you'd like. Upside exposure to Bitcoin, built-in downside protection, defined outcome period. So again, you want to buy these on day one, hopefully, and write it for a year. They have why Calamos protected Bitcoin ETFs. You can decide what you agree with or disagree with. High volatility and drawdown risk potential. We know that. So we're reducing risk by using options. Unknown investment horizon versus defined levels of protection, defined outcome period. So again, they give the reasons behind why you might consider something like using this Calamos ETF. Then they get into this whole idea of the Bitcoin revolution is happening now. If that is true, then why would you use a limited upside? I'm not sure, but I do get it. I think there is a real potential for people to utilize products like this. Let's not forget too, you can always go mix and match here, right? So you could also buy some of the 100% protected and some of the 90% protected and mix it together and give yourself 5% overall, depending on how you want to attack this with your investment if you're going to go into this type of product. You can see how Bitcoin has scaled over the years and just how much of Bitcoin has become one of the world's largest assets in the world, how that's changed over the years. And I also thought this one was kind of interesting. Hopefully I can squeeze it all in my little box here. But you can see just how volatile Bitcoin has been. So go back to 2014 and you would have lost 58%, right? This would have protected maybe all of that, or 10%, or 20%. But then I had 3 years together, 36%, 120%, and over 1,300% from 2015 to 2017. Then I lost 74%, then back up, then back down, then back up. So where do we go from here? But overall, it's been quite impressive. And pizza guy there's pretty sad these days, I imagine. It's, it happens. Anyway, let's jump in and take a look at the option strategy that's behind it, that drives that return, so we have a better understanding of how this could work in your portfolio. So to do that, let's focus on CBXA. So this was the one that was in the middle. This is coffee, cream, and one sugar, or that 90% protection level. So the start date for this one was 4/7 of 25. Again, that's when you want to invest if at all possible. Total net assets, 9.7 million. I know that seems relatively low, but again, they release these in series, so it's going to kind of be blocked off. And since Bitcoin has kind of rallied since 4/7 of 25, it wouldn't be something that I would invest in now at all, okay? I would just sit back and watch and see how it performs. I would wait for the next series. But if we scroll down here, we get this interesting chart. It kind of shows us our outcome performance. So it has the current value and the starting value. So let's look at the starting values. Back on 4/7, it was worth 25. It's now worth 28. If you run over here, we see the cap rate, 29.43%. If we deduct the expense ratio, we get 28.74. Okay, protection level is 90% at the start date. And if you deduct that expense ratio, again, you get 89.31. And the floor was set at 10%, but again, with the expense ratio, it's really 10.69. That's the max loss that you could have. And that's out 364 days. Now, some time has ticked away and Bitcoin has rallied, so we can see that the floor has changed. So if you wanted to invest today, now you can lose 19.5%. Very different story, right? Over 20% when you add in the fee. It's not a good time to invest in this one, right? So your protection level and everything has changed based upon those option values. So again, that's why you want to invest on day one. Now, I haven't looked at it really closely, but I imagine if it's declined or traded sideways a little bit, you could still invest, into the cycle. Not the case in this case. So now let's download the holdings here and take a close look at exactly how this is structured to get this. Because you might be thinking, Dave, how is this possible? Well, let me show you. So here are the holdings for CBXA, which is that 90% protected ETF that we were just looking at. And you're going to see this is a pretty simple setup with just 3 positions. So they have treasury bills. That's the vast majority of the money that you give them. The rest is CBO mini Bitcoin index options. Long call option, short call option, which defines a debit spread in this case to give us that defined outcome. And how you move around the strike prices on those 2 options will define the level of protection and your outcome potential, your upside potential for this trade. So if you think about it in terms of, hey, I'm going to invest $100 in this. If If you did that, they would take about $96 and they'd buy treasury bills. And at the end of this cycle, that making around 4 to 4.5% would give you back your $100. Here you go. You invested $100, you get that 100% back. It's 100% protected. The extra $4 they get to put into this strategy, this long call, short call, debit spread strategy, and that will define the outcome with those $4. And that's what gives you your return or your level of protection. So we'll run through an example, but again, they're using this CBO index. I'm going to show you an example using IBIT, which is an ETP, and I'll show you that trade now, and then we'll get into exactly how we could match up this type of return doing it ourselves, and that should give us a better picture of how this all works. So if we wanted to model something like this, we could use IBIT for example. Now this is a spot Bitcoin ETF, and I use this for lots of option trades, so that's what I'm going to use. It currently sits around $62 per share. And I would set up my debit spread this way. I would buy to open, one call, going out a little over a year. So this goes out to June 18th, 2026. And I picked a $56 strike price, which is about 10% below the current price of $62. So that's going to cost me some money buying this call because it's in the money by quite a bit, about $6. Then I would take in a little bit of credit by selling to open one call contract out a little bit over a year at an $80 strike price. Okay, so that's about 30% out of the money above the current price of $62. So that's going to give me some credit, but overall a pretty big upfront cost of about $830 right now that I got to cough up to set up this trade. Now that I've got it set up, let's see what are the potential outcomes from this trade and paying $830 upfront. And also note down here at the bottom, our max gain for this trade as we show here is $1,572 and our max loss, $828. So with that trade defined, now we can kind of plug it in and see what our results could potentially be depending on where IBIT finishes in 1 year from now. So currently it sits at $62 a share as of 5/23/25. 10% below that price would be $56. That's where we're putting our long call strike. And 29% above that price would put us right around 80. That's our short call strike. Okay, so this defines our potential outcome of max loss of $830, max gain of $1,572. So let's think about this as we have $6,200. Why? Well, because that's 100 shares of IBIT, right? So we're going to look at this as a chunk. So if we have $6,200 to invest into this, $830 would go to pay that premium. Right? Remember, it costs us, that's our max loss. So we're out that money, but we have $5,370 sitting on the sideline, maybe in a money market or in T-bills in this case. And then all we have to do is think about what could happen out to expiration. IBIT could go through the roof to $1,000 a share, right? In this case, we're kind of sad, right? We capped our upside, so we only get 2 pizzas. We could have had thousands of pizzas, but it is what it is. But it could also collapse right to $5 a share. In this case, we're kind of happy that we have this protected ETF or this protected structure because it's going to protect us from a lot of the harm that could potentially happen. So all this is defined by our long call and our short call structure. Again, so if we think about a simple trade here, let's go out here to this particular one. Let's say IBIT at expiration, it goes from 62 to 70 over the course of the year. What's our outcome? The math is fairly easy to follow. I broke it down this way. So at 70, if we take 56, or if we take 70 minus 56, we get 14, right? So that's 14 points above our strike price. For every call you have, you would make $1,400, okay? So in this case, we make $1,400 on the call, but our short call would expire worthless, right? Because it's below our short call strike price. So we just keep the $1,400, but we make $570 because remember we spent $830. Now we also have money sitting in cash. So in this case we make $214.80 no matter what, because this money is sitting in cash or in T-bills or whatever we choose, and that gives us part of the return too. So in this case we make $570 or 9% here. We make a little bit from cash position, giving us $784.80 overall. We end up with a 13% return this year because of our structure that we have set up. And you can see the other extremes. So I like to test the extremes just to show people how this works. So again, if it goes to 1,000, right? You make a ton on the long call, you lose a bunch on the short call, but you still capped your upside. So $1,570, giving you a 25% return, some from the cash that you have sitting on the sidelines for your total return. Therefore, you set your ceiling at 29%. Doesn't matter, okay? Doesn't matter whether it goes to 80, 90, 100, or 1,000. You've capped your upside at that $80 short call strike price. Fun stuff, right? And the same holds true at the bottom here, right? Your max loss is going to be at that 10%, okay? So that's how you set your ceiling. That's how you set your floor. It doesn't matter if it goes to 1,000 or if it goes to 5. We know our potential outcome. That's it. Simple structure, hopefully easy to follow. But of course, if you have questions on this, just ask down below. So let me know what you think about these Bitcoin protected ETFs from Calamos. Is this something that might finally get you to put your first dollar into something like Bitcoin, or is it still, no, I'm not going to do it? For me, I do trade IBIT options quite a bit. I like that arena. It works well for me. I also have some Bitcoin that I own directly through a couple different sources. One is River. You can check that out below. I dollar cost average into River. It's a simple, intuitive platform that works really well. And if you invest with the link, we both win. They'll give us both some additional Bitcoin with a deposit of at least $100. So you can check out that link down below. But for me, yeah, Bitcoin is something that I'm continuing to grow slowly in my portfolio, and I love the option side of it. So again, creative options here with these Calamos ETFs. Any questions, ask down below. We will see you real soon. Have a great night. Whoop.